fifth session. Today will be done by Mila. So it's her favorite part to talk about, the first steps in investment, or what the investment is all about. So she's going to go through 17 segments of the investment market: classification, reliability, liquidity, profitability, and investment business, and how to test objects in investment instruments. It's I think, very serious and very important session. So hopefully you will learn a lot. But I'm going to share, before I let her, to come on in ether, like in live, I want to share with you your results, which are not really good. And the question we will have is why? All right, can you see my screen, guys? Hello, can you see my screen? Yes. All right, great. So do you like the numbers? Do you like how you're completing your homeworks? No one in 4 sessions have passed 50% mark. What do you think? What do you think Andre Havrata will say about this? I don't think would he be happy. I'm not happy. I don't know how about you. So the question is, you have no time, you have an excuses not to complete the homeworks, you have no idea what you have to do, or you have no clue what the last 4 sessions were about. Remember, I told you guys that it was okay not to complete the homework because we had like, I'm not saying that you had to do half of your works, but simple as like kind of complete your profile, introduction, start completing, the structure where you're putting your numbers, how they're growing, dream boards, like with essays. Like, even if you start a little bit from everything, I'm happy to see this. At least I can put you some marks, but I don't know. I don't know what to say. I don't know what to show Armand. I don't know what to show Mila, and altogether we're very disappointed that we are spending here time for you guys. So we have committed to be here for you, and but we don't see the results. So the question is, do we need to stop and go back, or give you time? Or what do you want it to do? Like, what's the point for Mila to come here and speak for another 3 hours, give you a very important session that we have no clue if you have understood the last ones? And yeah, so why you haven't done it? I see you are not happy. I see you saying very poor. You're saying you're disappointed, but why have you not done it? You understand that like, to sit here for Master Profi, just to tick the box that you've been in Master Profi, would not count as you have passed the Master Profi. You can sit here every session, but you need some results. Andre Havrata would say, yes, you kind of attended Master Profi, but once he sees like 4%, 10%, 18%, he will ask the same question: did they actually understood the session? Maybe the trainers, who'd give you the session were not enough good. There could be a different analyze process come in place, analyzing the process to understand what is the problem.
Annie, can you hear me?
Yes.
Hi, it's Sally speaking.
Hi, Sally.
Hello. I'm going to be going into a presentation soon. So I would just like to make a comment that from my side, and I'm speaking, I'm sure, on behalf of Sharon as well for Australia, we are doing, well, I am doing probably 10 presentations a day, registering people in between, training people. I don't know whether I'm coming or going. I'm literally working from 8 o'clock through to like about 9 o'clock being my last presentation. I feel quite challenged that I've got to sit through 3 hours twice a week. I really value the opportunity of having Master Profi training. I value the topics that we are getting, but in such a crucial time, more personally incredibly time consuming. Because I've been in an industry like this for many, many years, I have dreams boards, I have names lists, I have them in other formats that I can't export or import into this Excel spreadsheet. So for me, it's just far more valuable to be sharing this opportunity. And I'm eating, sleeping, drinking Skyway every single day. And I would love to do this homework and love to get the value. But it's just not priority to the same extent right now. The timing isn't perfect for me to be doing this course. So I hate that I'm being judged and scored such a low score, because there is no time for the homework. Not to the extent that it needs to be completed. Because in all honesty, it's not an hour a day. It's far more than that if we are to fill in all of those Excel spreadsheets to the extent that they are required. So I don't know how the rest of the team feels, but I really hate the thought that all of you think you're wasting your time and that we don't appreciate you and we don't find there's value, because I think I can speak on behalf of the whole company that everyone is appreciating you. But I just think the whole world is right now focused on getting the message out of Skyway.
But to be honest, I understand, Sally, and I understand where you're coming from. However, we have also, same time, Russian Master Profi, and we have Italian Master Profi, but they do homeworks. They do complete them. So we know that we are not giving where you like sit up something. We have like examples like a Russian Master Profi and Italian Master Profi where they do homeworks, even though, as you said, the timing is crucial. Because once you make a commitment, even if it's 1 hour per day, at least I see that you are doing something. I can show then internally to to whoever is also looking after how you're completing the homework. At least that we can show that you are doing something. Yes, the numbers are coming to the company, but if you want to open the office, if you want to be a representative in read, we need to know that you it's not just bringing the numbers, it's also understanding the business. And everything else.
I can actually second some of what Sally said there. I'm finding the time commitment difficult, managing a family, leaving my home in the dark every morning to go out and earn more money so that I can do better in this program. I've been involved, like Sally, in a lot of programs before. I've been online marketing for over 10 years, been networking for longer than that. I also have a lot of dream boards already put up. I have a lot of names lists done, the same as Sally, and are unable to put it into this medium. I'm behind in a lot of the training because I haven't been able to attend it. Some nights I'm not getting home until it's dark. And after a full day's hard labor, I'm wrecked, to be honest. And unfortunately, this has been the second time I've been able to come live to listen. So I am still behind in a few things. I really aim to catch up, but now I'm looking at it, I've got 12 hours of content to catch up on. And what I've found so far with what I've been watching is that, unfortunately, the first half hour, an hour, and I know this needs to be said, so I'm not complaining per se. I'm just letting you know that the first half hour of what we go through here is not actually the content of what we need to be learning. And I'm all for learning about the company. I'm so passionate about the company, you wouldn't believe it. I'm actually shaking and trembling right now because I know in my heart that this is the best thing that I have ever seen in my life. And I've seen a lot. I've seen a lot of shit. I've made a lot of money. I've lost a lot of money. But this is the best thing that I've seen. So I'm committed to getting it done. But I'm with Sally. There's only so many hours in the day. If we're working a full-time job as well as presenting the opportunity as well, I mean, if I'm working a full-time job, I've only got the evening hours to talk to people about Skyway, and I'm doing that. I'm not growing as fast as Sally and Sharon, but I am growing, and probably growing a lot faster than I anticipated that I would. So time poor is a big problem at the moment. If I was doing this full-time, hey, no problem at all. But unfortunately, I haven't got that luxury at the moment. I've tried that in the past where I've gone, this is a great opportunity. It's going to make a lot of money. And hey, look, they all can, and I know we will from this. But I'm not about to put myself in that position again where I'm at the end of the month going, how the fuck am I going to pay for what I need to pay for this month? Because I put all my time and energy into this, and yet it hasn't produced. And don't get me wrong, I'm producing results here. I'm getting income, but I'm putting most of it back in, as most of the people are. And I want to continue doing that because I want us to get to stage 15 quicker. I don't think there's anyone on this call that doesn't want that. So if I had all the hours in the day to give to this, hey, I'd be at the top of that list. I'd be 100% up on where we need to be. There's a lot of things that I don't understand in it so far that I've looked at and just gone, it's obviously in a part that I've missed. So I need to go through, as I said, that 12 hours of content, and the first half an hour, I don't know when I actually get to the content. Does that make sense? I mean, I'm very appreciative for the time you guys are putting in, and I'm committed. Hey, Mila, I'm committed to getting in here and done what we need to do. I want an office here on the Gold Coast, and I believe we can do it. And I came here, I was ready for it because I knew that this was coming out tonight, and I was ready to stick my head in shame, and I'm like, I'm not doing too bad, but I'm still not doing as well as I need to be. And it's not because I don't want to be doing it. So that's just my 2 cents.
Okay, thank you.
You know, guys, I have like few suggestions. I heard what you were saying. So there are a few options which we can look at this. Option A is we will not go through next session unless the previous sessions are complete. So unless we all as a group, at least in like 40-50% mark, and we have some people I appreciate who can do less, who can do more, but like an average, we need to be at least 40% or 50%. So option A, we're not going through the session unless majority of the group are completed previous. Option B, we're doing Profi once in a week only, which means that there's going to be extra, months added on. Or option 3, I mean, for people who are like, they're very, very busy. And I appreciate that, Sally, you mentioned like yourself that you've been so busy. You can take the pictures of your previous, boards and names of the contact list. It's fine. If you're struggling now to input everything on Excel sheets, it's fine. You can do this during the Christmas time when we have a long break, but you can at least send us the pictures. So for leaders who feel like you're struggling big time, I understand this. And actually the Profi designed for those people who are just about to start off. And I know that Sally and Sharon, yourself, you've been in a Profi before, so it was not even compulsory for you to attend this one. So you can make the call on this because you already passed your Profi. For you personally, this is just recap. So therefore, look at this option. So option A, we will not continue unless we hit the group average. Or option B, we are going to do once in a week, but then it's going to be extended for another month. So that's pretty much kind of what I can offer from my side. And it will be good if you can let me know, let's do the poll. I will create now poll, and we will all vote now. Just give me a second, because then I want to see the statistics and I want to show the results. So it's not like I'm making it up. Profi.
And also, like, if we do once a week, guys, it means that you have to complete the homework still. So it means you have more time to do so.
Once per week.
Yep.
Or
Personally, thank you, Mila. That is a great solution. I would personally like to miss this week Friday and have us have the extra time to catch up on homework, and then I definitely will vote for only once a week.
Okay.
Because I think all of us would far rather do this thoroughly and completely and take a bit of time, because whilst we all want to open offices, in all honesty, I think we're all probably wanting to look for partners until we reach the end of the year and potentially phase 15. So I don't see that we necessarily will open offices anywhere before January. So I don't know, I speak on behalf of Sharon and her team, but personally I think to really put a lot of time and effort behind growing the numbers, because in that way we're also identifying future leaders, we're identifying the people that want to get involved in the projects and in the larger investors. And I think it's been reiterated over and over in the company that right now, don't look for the projects, get involved on the ground floor, which is looking for the public. So the focus for me is there. But I'd love to do Master Profi and do it properly.
Yeah. You can vote, right? Because it says it's only for attendees.
No, it says Profi training. Select one of the following, but we can't press anything. Profi in progress for attendees only.
Okay, yeah, it's for attendees because we are all in staff mode.
Yeah.
Hi, Mila. Can you hear me?
Hi, Sally. Yeah.
It's Sharon.
Oh, sorry, Sharon. Yeah.
We're beginning to sound the same. Spending so much time together. Yeah, I agree with Sally. I love to give my all in everything I do, and I'm a bit frustrated that I can't give the required amount of time to really do this properly. I'm the kind of person who likes to, get 100% in everything I do, and I work really hard and put my heart and soul in it. But yeah, I'm struggling. My husband's working away at the moment, so I've got the whole responsibility of the house and lots of other things to do, as well as, doing this, and just my team is growing so quickly, just keeping up with everybody, and also wanting to get the webinars started and doing live presentations as well. So the focus has really been on that, to make sure we do it properly. I don't want to do something half-heartedly. I'd like to be able to have a bit of headspace that I can focus and present that well. So yeah, I think once a week is probably a good idea. And yeah, I'm happy to do the course again. I'm thank you that we've got a pass. I'm happy about that. But I do actually want to do the nuts and bolts of the course, and yeah, so yeah, that's my thoughts anyway. So sorry, did I not turn the camera on? Oh, there I am. Hello. Sorry, I thought I had the camera on, so I was just chatting away to the screen. So yeah, all good. Yeah, we're growing so fast here, and we're committed to opening an office. But yeah, I think
Can't hear you.
not before the end of the year.
Sharon, we couldn't hear you.
You're breaking down.
No, we can't hear you. Something. I think the internet. No. Need to learn.
There are a couple of projects.
I guess we lost.
Can't hear me still?
We lost Sharon. I can hear you, but the line is very weak. But I guess I understand what you mean, guys. So like majority of ESC, you said that you want to do once a week. So fine, let's do once a week. The only thing is, I will ask Annette maybe during the session while I will talk. Can you just create maybe like Survey Monkey or something with these two questions, so we can like post this in a group, and receive some, results with names. So then, I can go back to Andre and just share with him the statistics that people would prefer to do once in a week. That will help, instead of that us just, assuming that we would have some data to work with. Yes, Pierre. Hi. I cannot hear you.
Can you hear me now?
Yes. Yeah.
You hear me now?
Yes.
Okay. I say I have hello. I have no other thing to say that I didn't see my name on the list, so I definitely done some, and but I'm not done very much. But I'm on the run, so to speak. So I will do more. But it's I'm not added to the group. I don't get the information. I've been asking about that. That should be quite simple. And I don't know if you have received my work, because then it's if it's I'm not on the list anyways. Like last night, I filled in like 150 names on the contact list.
With who did you share your?
With you and Mila, with both of you, and I did put in the wrong. I put in the wrong mail for almonds, but I think there should be no.
No, I haven't received anything. No, maybe Mila has it, but you haven't shared it with me.
Well, okay, I have to share it with your mail, but I have to do it again, so I put it on the wrong. So I have to do it again.
No, you don't. Again, you need to share. I will post my email once again, and you can just share it with me again.
And Perry, you said you're not in a group, so you don't see a Master Profi group, or?
Yes, that's right.
Annette, can you see if Perry is in our group? Because that's quite strange.
I don't think he's on Skype.
No, I'm not. I've been asking about that because it would be nice to be. If I'm going to log in, I have to look for the logging and everything, so it would be easier. So.
Yeah, sure. I'm just saying you're not on my Skype group. Like, I can't add you because you're not in my contact.
Okay.
So I haven't received this request either.
Okay, I'll add Per because I can see him here. So I will add him to the group. Just send you a message.
Okay, good. Good, and I see if I can get the list over to you as soon as possible, because I definitely done something, so I should have been on the list. I'm not like proud of it, but it will be better. So yeah. Yes.
Okay, thank you. I send it to a link, so if you click on join conversation, then automatically you will be added to the group. It will be easier.
Okay, thank you.
Okay, I can see you now. Perfect.
Yeah.
Thank you.
Thank you.
All right, guys. So let's get this session out of the way, and then next one I will give you updates in chat. So more likely it will be then next Tuesday. Then we can do either each Tuesday. We'll see which date then would be better. All right. So are you ready for a bit of financial part? Do you have your pen and paper with you? Yes. Perfect. It's going to be a really, really, really interesting session. I love it. I've done it so many times, and it's one of my favorite after capitalization. So I'm sure you will you'll get lots of value. We will skip the what is called introduction part, if you don't mind, because we already spend half an hour in discussing a few very important things. So let's just skip introduction part, and then we'll go directly to the training. Okay, hope you don't mind. Today have no introduction. Yeah, can you please tell me if you can see my screen? Awesome. Okay, so let's start. All right, so today session number 5, investment basic, part 2. So before we go in further, recording all good. Before we go in further, you remember we had this 5 rules we have 8 rules of private investors and 5 commandments of private investors. Do you remember this? And also we had numerous of webinars when we go through, you know, the investment basics include the one we done on session number 1 and session number 2 when we talk about, you know, commandments. So what you need to do is to save 10% from your income. You need to learn how to invest wisely, protect your money, always learn to earn more, and also control your expenses. How many of you are actually familiar with these ones? How many of you know that what these 5 commandments means? Andrew, Sharon, Philip, Manjula, perfect. Annie, Annette, can you please send link to Ali? He tried to enter this room, but he said he's struggling. Okay. Or Ash, if you can send him this link, that would be good, because he called me already a few times. Can I just call him back now? Add him to the group. Awesome. You know the 5 commandments, and of course you must be very familiar with 8 rules of private investor. But this one, let's go through this one more time, not much in detail, but I just want to check your knowledge. So can you tell me which one is, you see, we have 8 different points. The first one, the difference between financial freedom, financial dependence, diversification, financial planning, don't be greedy, follow investment discipline, always learn to earn more, education, self-development, and 5 commandments of private investor. Now let's do a bit of, you know, test. Which one is the first? Which one is the first commandment of private investor? You don't need to type everything, just, you know, the first words would be enough. So let's check your knowledge. What is the first one? The first rule of private investor. Please reply either with your voice or you can type on chat. You definitely have it in your notes, and I definitely mentioned this previously on the session number 2, I believe, when I talk about the fundamentals. Nope, not don't be greedy. Which one is the first? Any other options? Nope, not education. There is no FP, financial planning. No. What is the first which you need to know if you're learning about, you know, like investment overall? Number 5, 1, 2, 3, 4, 5. Always learn to earn more. No. No. No, the first one is the difference between financial freedom, independence, asset liabilities, investment, and investing. So if you look at the session number 2, where I talked about, you know, investment fundamentals, the first what we talk about was the difference between financial freedom, financial dependence, what means, what are assets, liabilities, what is the difference between investment and investing. Okay, what's number 2? What do you think is number 2? This is number 1, Andrew. So the difference between, so this bit is number 1. So which one is number 2 now out of this 1, 2, 3, 4, 5, 6, 7? What is number 2? Don't be greedy. Are you sure? No, I don't think so. Okay. Okay, well done. 5 commandments, Andrew. Correct. Number 2 is 5 commandments of private investor. Excellent. What is number 3? Okay, you probably access your notes, right, Andrew? That's why you're hitting it. Number 3, financial planning. Number 4. Yeah, well done. Well done, Harin. Diversification. Number 5. What is number 5? So we have don't be greedy left, follow the investment discipline. Number 6, we have also education self-development left, and always learn to earn more. It seems like only Andrew heard me, in the session number 2. Don't be greedy. Then it goes education self-development, and only then it's always learn to earn more. So I'll give you the correct order with this slide. So take the print screen of the slide because it's very important. This is the fundamentals of Academy of Private Investor. And if you will only learn, these 8 rules and 5 commandments, you will see how everything would, start making sense. And we have in our back office educational tab where you can access these basics, 8 rules of the private investor, which are explained there very well, 5 commandments, which are explained there also very well. And for those who wasn't there on the session number 2, or maybe you've forgotten, then you can access recording and you can listen again, because I believe I also explained it very well. So number 1 is the difference between financial freedom and independence, assets, liabilities, investment and investing. Number 2 would be the 5 commandments of private investor. Number 3 is financial planning. Remember when we discussed about the short-term, medium-term and long-term financial planning. Number 4 is diversification. That's you don't keep all eggs in one basket. You need to invest in different instruments. Number 5, follow investment discipline, which means that always put aside anything from 10 to 30% from your incomes or from your income streams, and invest into different companies, depend on if you're looking for what portfolio you want to create. Don't be greedy. Very self-explanatory. Educational self-development, of course, unless you know how to invest or how to look for the right companies, only then you would be able to make the right choices. So self-development education plays a huge role. And the last one, always learn to earn more, which is more assets you have or more income streams you have, then the more you can invest, then potentially you can earn more from your assets and your investment. So that's pretty much the logic behind it. And we have people who are actually the first people who supported the Skyway were people from Academy of Private Investor. And the reason why they were one of the first founders or first people who invested in a Skyway company, and we're talking about stage number 1, when it was like nothing at all, just apart from Unitsky ideas and few tests been done in Russia at that time. Because they knew these rules, they knew what is investment, they knew how to assess investment, they understood what are the risks could be related to the Skyway and etc. And because they had all this knowledge, they were able to make the right choice. And today these are people, the first 100 plus, they are of course owning a huge stake in a company, because they invested in a time where $1 would be equal to 1,500 pre-IPO equity shares. You see, if you have knowledge, if you have the right information, then you would always be in the top of the ladder, because information today is the key. And those people who understand how to use this information and what is there for them, they always will be top earners. And that's why we wanted to teach our students in Academy, in the Skyway Invest group, that you need to start with the basics, and these 8 rules are the basics. So please make sure again you take the print screen, and then next time when I'll do the investment session, we will start with this again. I will ask what are the 8 rules of private investor and what are the 5 commandments of private investor. And because some of you wanted to do the webinars, we'll also include this in the webinars, because what we realized that when people are hearing not just about technical, not about just Skyway as a technology, but once they become more educated about investment, we can also see better results in terms of they understand what they invest into, they understand the numbers and figures, they understand what are the risks related to the technology, funding, etc. So these people are much more aware of what's going on, and these people can work with them also with the big investors because they understand the basics of the investing, so they are able to answer all the difficult questions which come from the big investor. And the only reason why they can, because they know themselves at least the basics about the investment. So this is quite important to remember, quite important to learn. But today we will talk about specific instruments. As Aneta said, we have more than 17 instruments which are available for anyone. It's actually more than 17, but I will only mention those who I think and we think as a company very important for you to differentiate. But let's have a look at the Alvin Toffler quote. The illiterate of the 21st century will not be those who cannot read or write, but will be those who cannot learn. Sorry. Okay, one more time. The illiterate of the 21st century will be not those who cannot read and write, but those who cannot learn, unlearn, and relearn. And this is so true. And if you have a look at them, one of the reasons why today the big investors, they not, put in all the funds into the Skyway, it's, because of that reason too. Of course, I'm not saying that all big investors they cannot learn, and there are hundreds of people who are very open-minded and they have right assets in finance. But if you have a look at the entrepreneurs who are looking for the unusual business, if you're looking at the entrepreneurs who understand that there's going to be a technology or it's going to be a company which will disturb the market big time, then they would be they will have right mindset for them to invest. And if you have a look at the company like Facebook, Facebook disturbed market big time, because before it was social media was never to the level that you can connect with anyone, and if you look at his if you look at the movie, how it's all created, the Facebook, it was just idea of connect the students from one university, so they have the better mean of the information. But the idea itself was it was not very unique. It were other company they try to compete in this market, but the way how it was presented was very unique. The what is the mission of the company was very unique. Same with Amazon, for example. Before, people would just send the parcels from home to home, or they might have the little store, and it was not very popular because lots of there are lots of processes you need to put inside for you to make this delivery process very smooth, and then customer service department and so on. But the way how it was structured on Amazon platform, it was completely different. It was revolutionary, and only those people who understand that once the product is different, once the mission is different, once this product is disturbed in the market, that is where you can get the huge returns on your investment. And today there are lots of people who look at our company, they look at the Skyway technology, they like it, but then either a big investor, they think like we'd rather not to necessarily multiply our assets, but we want to make sure that we can sustain the money they might own. So they're not necessarily looking for companies with the high risk, so they were rather looking for the guaranteed investment. That's why I'm sure the big investors will be really relevant once we talk about the project development. But from another hand, there are also some investors and even the hedge funds who will look at these projects and they're not able to kind of understand how all of a sudden the transport can be linked with their multi-level crowd investing, and this idea for them is very disturbing, and they cannot fit ourselves within the frames they have. And that's why those who don't see this, because they cannot relearn or unlearn, or they cannot apply the new frames to the new business, these are, you know, going to be illiterate people of 21st century, because everything is moving super fast, information flow. There are tons of companies in the market. There are different businesses who look for funding and for investment, different proposals, and, you know, so on, so on. But only those people who can, you know, take their past experience and say, okay, that was the past, but it's not necessary, will be applicable into their business. Only those people will be successful. And that's why you guys all here today, and the part of the, you know, Skyway Invest group, because you understood, like, sooner or later that, you know, the product will change the people's lives. And I'm sure that initially you might be here because of the, you know, money, might be because of the reward and investment, but I can guarantee that, you know, majority of you today promoting the company, not because you can, you know, earn money through the network marketing, but because you like the idea and you like the company mission. Am I right on this? Just what are your thoughts? Because I believe that, you know, people, once they've been in a company for a while and, you know, they understand the mission and vision, that will be a major factor which will, you know, keep people, like as Sally said, wake up 8 o'clock in the morning, go to bed at, you know, 10, 11, 12. It is not necessarily the monetary reward at all. There is something bigger than this. And that's why people who can, you know, apply, you know, they or reapply the old experience and put them into new frames, the people who are flexible, the people who are willing to learn. And I know, like, some of you have even, you know, more experience in, you know, network marketing than myself or Annette or Arman has. But at the same time, you open and you listen us what we want to teach. You know, it's, again, it tells a lot about the people. It tells that you have the right mindset and you're ready to, you know, unlearn and relearn. And therefore, you would be the ones who can take this business into your regions, into your country, and promote it to completely different level. So you're on the top of the wave. And next time when you talk with someone who for some reason cannot, you know, unlearn and relearn, then you just need to give them, you know, example with yourself and the way how you find the Skyway. And I think, you know, the more and more people, what I noticed, the buying, you know, people's stories. So you don't want to just give them some theory. You wanted to show them, you know, what was your story in this project. And then as a result of it, when it comes to the big investors, you also would be able to understand them. Because just to give you a bit of, I guess, it's not necessarily related to today's topic, but I wanted just to give you a bit of, you know, what is called a practical experience. Like when I talked to a big investor, it was very big investor. He's very rich. He live in Asia, but he traveled to London. And when he said like, well, I need to see the old documents. I need to see the company cash flow. I need to see, you know, inventory. I wanted to know what assets the company has, what liabilities. So he was asking, you know, all these, you know, documents which usually company, you know, should have, right? But the only thing what he couldn't understand, that we do have the audits, we do have, you know, assets and liabilities in the company, and I can provide him with all this material, but this material would not be easily just, you know, with one click available on internet. These are, he asked to look at the internal data. And for you to look at internal data, the best place would be is to go to Minsk, meet with Unitsky, and he can, you know, open up all the materials and all the patterns and show you that we have this and this and this ready. But because, you know, we cannot provide them unnecessary the information, you know, as one click, and this is not the publicly available information, then they start, you know, developing the concept that, oh, they don't have the documents, or they don't do the business in the right way, or maybe they just, you know, looking to take my money and run away. So, you know, such a little thing, which is, again, if he would be more open-minded and look at this from his point of view, like, okay, you have your corporation, would you provide a random person who haven't even invested a penny all the material and assets and inventory and, you know, balance sheet? Of course not. No one would ever do this in the world. You know, but they ask us, or he asked me, and the fact that I didn't have this, you know, information in front of him, straight away he think like, oh, you know, this company is this very dodgy company. So you need to actually like look at this from, like, you need to understand yourself, but that sometimes what they ask you, it is not like we don't have the information, but we're not even like legally we cannot just share this information online unless they make the way and unless we have a proper business meetings. And in my previous role, I was involved with doing a few meetings within the capital markets, which is the banking sector, and all the documents they ask about the company, I only show them these documents once I saw them. So once we had the meeting, I can show them the contracts and I can show them, you know, the documents. I cannot even send it, you know, online, and it was for the conference. And people are asking the details, audit details, and, you know, inventory details of the you know, Skyway technology. Like, it doesn't make sense at all. So make sure that, you know, you also have enough arguments. And when people are try to tell you that, you know, your company, you're not doing it in the right way because you don't have the old documents, well, simply that is not true at all. So a bit on side topic, but yeah, I think it was, I thought it was important to outline this. So let's have a look at the 20 investment segments we have. So we'll go through all of them, and I will give you a bit of you know, background on each. So the first one is education. So education is very important, as I mentioned previously. The first, what you need to invest into as investor, as a private investor, is education. So once you know, like, it's going to be different courses, it's going to be different knowledge. Even the master Profi, for some of you, you paid for the Profi course. So this was the, you know, investment for you to be part of it. Information is very important, it's very crucial. And for people who don't know how to use information, the people who just, you know, go from one course to another course to third course and do nothing about it, then you just, you know, waste of money and waste of their time. So that's why education is a key today, and people who are open-minded, people who are flexible to learn and unlearn, they will be successful. Number two is banking sector. Within the banking sectors could be different, maybe ISA accounts or savings account where people can invest. Some of them would be for fixed term. Like in UK, we have ISA account which are fixed for 2 years. So some of them 18 months, which means that every month you will put the money into your savings account, and by the end of the term, the bank will unlock your account where you can get your money back plus yield. Also, we have another accounts where you can just you can put the monthly and you can put the money on a monthly basis, but they're not locked, which means that you can withdraw anytime. But the only thing is, if you keep your money longer in a bank for a fixed period of time, then yield will be higher. And the reason why, probably you heard about, you know, how a financial market is, you know, being created and how the banking sector works. But for every single $1 online, bank can make, you know, $10. It's very interesting. Lots of, you know, conspiracy theory about it, but then lots of documentary movies about this as well. Why today, you know, this top rich people and people who sort of, okay, let me ask you this question. Do you believe that in the world today we have certain people who rule the world from, you know, financial point of view? Do you believe in this or not? Let's start with this one. Yeah. Okay, perfect. So we're on the same page. So, so what happened is, why they are worried today, all this, you know, rich family and founders, how they call themselves, that's if today the people in one day will decide to withdraw all the money back, then it's going to be completely, you know, the market will be completely destroyed. They, like, not a single country today in the world would be able to cope if people decide to withdraw all the money they have online. It will be impossible. The reason why, because for every single pounds or dollar you have in your online bank, bank can legally make it 10. And I'm not just making up. You can actually have a look at this. It is completely legal. And I was so shocked when I came across some, you know, the documents where actually it stated that it is the case. So bank has legal rights for and like across the world. So if you, let's say, if you have $100 staying in the bank, the bank can make another, like from each $100 will be 1,000 which bank can work, which means if you put your money, your £100 or dollars in the bank, and then I open up, a business which will be traded through another business through this bank, then the bank can take your money as some sort of the deposits, that they have actual physical money there, and they can add another zero, which means that all of a sudden out of your 100 investment they make 1,000. And if you look at their global perspective, numbers are huge. It is very, very dangerous. And once you realize this, and once you understand that it is the legal process for them to do, like, I was shocked. And that's, I remember when 2 years ago, I believe, Greece been kicked out from the European Union. So what happened is every single bank was shut because people were worried about the money. What they wanted to do, they want to go to banks, withdraw their money. And the bank realized that they cannot cope anymore because lots of people were queuing outside the banks and, ATM machines to withdraw the money. And bank realized that they don't have enough money to give all the people. So what they did, they shut the banks down. And people were left without, no money. I think at the beginning they said the maximum you can withdraw is, 100 euros per account, something like this. But then they completely shut it down. And even if you look at the majority of the European and not European countries, why you think the bank has the limit how much money you can withdraw per day per person? Why? Who set the limit? Why I can withdraw 300 but I cannot withdraw 3,000? Because if everyone, or not even everyone, there's a certain percentage, if the people, let's say 40% of the people would decided in day X to go to the bank and withdraw, I don't know, a few thousands, then the bank can, go to bankruptcy because they don't have enough physical money. So banking sector, it is definitely one of the segments to look at from investment point of view, but also you need to be very careful because unfortunately today the banking sector is not that safe anymore. And in UK 7 years ago it was one of the high street banks which went bankrupt and people lost their money. They only paid back up to between 50 to 70%. They managed to pay back, but at the same time there are hundreds of people who were really, really disappointed because they were not able to release their funds. So number 3 is insurance. Insurance sector works really, really interesting as well. And I learned it actually from my previous job because I was dealing lots with insurance companies. So what happened with insurance companies, that's you usually have a contract with insurance company. It could be for 40 years or 30 years plus, depends. Each contract could be different. And every month you put, investment, or it could be bulk sum, again, terms and conditions different. But what investment or what insurance funds will do with your money, they will look at different businesses to reinvest. How you think insurance today can give you, for example, you invest 200 each month for the next 30 years, but then if something happens, maybe it's like medical health insurance, they can provide people with operations which will cost I don't know, anything from up to few millions, like from 500,000 up to few millions. It's such a big difference. You think like, well, I only put like 200 maybe for, I don't know, 5 years, but then part of my insurance will be the medical insurance, which is, very expensive. Like if it comes to the time when operations needs to be performed. But that's how they make the money. Of course, I understand that not every single person would require to go for like high spending, such as like operation costs and etc. But they have certain pool of money where all people who sign the contract with insurance company, they pay them on a monthly basis, so a lump sum. So the insurance company will take this money and they will put into different companies. So they can invest into the gold, they can invest into stocks and the forex. Some insurance company can invest in the businesses. So it is actually entire behind these insurance companies, there are, you know, so many other investment instruments which people don't even realize, because they think I invest money into insurance companies will be safe, but as a result of it, they actually, you know, risking the money, like the insurance money on a daily basis. But because they do it in a very large scale, and they have a group of specialists who would look for different investment opportunities, of course they make the average returns, which could be, I don't know, like 20 or 30%, like quite easily, because they have large sum of money to operate with. But if you look at your, you know, personal like personal accounts, you will actually realize that part of the contract in certain insurance companies would be that once you withdraw your money, or if you decided to stop your contract, then you might lose all your investment, or they can only provide you with what you have invested so far. They will not provide you with any yields and returns. The reason why is once you sign the contract with insurance funds, they will actually take this money and will start, you know, looking into different investment opportunities. And they know the contract is for 3 years, so they will look for certain opportunities where your money will be, you know, locked away for that period of time. And if you breach the contract, which means that they have to find the money somewhere to pay you back whatever medicine you did. And that is why majority of the cases, they would never pay you yields once you determine the contract before the termination date. Make sense? I hope it's not too complicated. But insurance funds, insurance market, again, it's one of the instruments which I think everyone should look at. And it's a majority of the country is compulsory to have a certain insurance. And I think it's very useful anyway. They usually don't require for you to invest bulk of money. You can invest a small amount but for executive months or years, which will give you higher returns. Going further, pension funds. Again, pension funds, unfortunately, they're not that lucrative anymore. If you compare pension funds which were available like 15 years ago and what we have now, the proposition will be uncomparable. For example, my family, my dad, he has his pension when he reached, I believe, 55 years old, because he used to work for the government. So he has really, you know, like very good pension, and he don't need to kind of look for extra jobs and extra opportunity, because the government paid like whatever the years he worked for the government, plus other jobs, he generated, you know, good pension for him to kind of not to worry about money like today, let's put it that way. But at the same time, if I look at myself, I don't even have any pension at all. And if you compare with the like 15 or 20 years ago, the pension were compulsory, because when you open up your pension, you would usually contribute something from your monthly salary, then the government contributes something, and then your employee contributes something. So you have the 3 ways of contribution in your pension. And nowadays, this is not compulsory. So the government, they're not obliged any longer to contribute over to pension, and even more, employee, like the company who employs you, they also are not obliged to put some money for your pension. So then you're left only with one stream, which is yourself. And people start looking for different pension funds where they can invest their money, but then the pension fund will contribute. So they will put the certain percentage, certain yield at the end of the, 30 years or 40 or 50 years term. In America, I know it's different. In America, the government's still the huge contributor to the pension funds. And I think it's great, especially for people who, all their life they haven't like full-time or part-time jobs. It's, especially for those, it's very difficult when you reach a certain age. Usually it's 65 now, and actually a government, they pushing this age now. I think for women, at least I know in Estonia, it's 67 years old, and for men it's 65. They will try to push the age further and further and further. So unfortunately, not everyone will even get access to their pension, because not all people can have such a long life, like 67 years old. And there is another trick again, lots of pension funds use today, where they increase the pension age, and the people would never reach the pension age. And what the worst is, that's with the pension, it is not going back to your family. It's only locked for you. So if something happens to you, in majority of the cases, that's how they structure the contract. If something happened to you, then all your money will be gone. Like you cannot pass it to next, you cannot give it to your children or to your wife or your husband. It's only locked for you and for you to access. So yeah, unfortunately, agree with Andrew. It's all scam. And before, when pension idea was created, it was actually after First World War. The first pension funds were created. It was with idea that the contribution from the government plus employee plus the company who employs you. So it was 3 ways pension, and that's how it was created initially. So the person, when it reached certain age after working for the company for the past like 30-40 years, this person will have enough funds for him to live like another 15 or 20 years, peacefully without worrying about money. But unfortunately now idea of pension is completely different. Lots of companies withdrawn from the pension. It is not compulsory anymore. If you also remember, like some of you, around like 15-20 years ago, it was very popular to have the different committees. That's if you work for, let's say, a corporation, or if you work even for like factory, it was the corporation who would protect people rights, like committee, and they will be the one who will always look for different contribution from employees as well, and they have different schemes where people will end up having even more pension, like once they reach the certain age. But today, this committee in majority of the country, they're not working anymore because there is no need for them. We are in the democratic world, so people can decide themselves what's better, and it could be good. But then again, if you look for those people who get used to work in the factories or big corporations, and that's the only way how they can make money, for them it's so difficult, because today they realize that once they reach certain age, it is not a support from the government. There is no support from the ex-company they work with. They can only rely on themselves, and if they have a bad health problems, or I don't know, if the family cannot support them, then they are in a really, really dangerous position. And average, for example, pension in UK, if you have a look at the statistics, it's 150 per week. And just to give you an idea, the flat in London, if you look at the 1-bedroom flat, which is like one room and 1 kitchen, it will be like 1,500 per month. So, if you have a pension 150 per week multiplies by 4, so it's £600. And the 1-bedroom flat is 1,500. So, I don't know how these people will survive. I don't know what like government think of and what initiatives they might create for them. But what I can tell you guys with the confidence that once, if you're not looking for your pension, then no one else will. And today, unfortunately, pension funds are not the best way to invest money, but for your knowledge, it's important to know that they exist and how they make their own money. I think it's very important to understand as well. Contribute to pension schemes are not guaranteed returns. Yeah, absolutely. Absolutely, right with you, Manj. So equity market, I guess equity market's very common. Equity market today it's very open for public, so anyone can invest into different startups, into different companies. Skyway with our idea multi-level crowd investing, we also part of the equity market, because the people, they invest into the company or they invest into business in return of the equity. Then venture capital markets, this will be those investment segment which are a bit more risky, because venture, if you Google the hello, can you see my screen? Can you hear me properly? I had some internet problems, I guess. Yes, okay. Thank you, Maddie. So venture capital market, if you just Google word venture, you will realize that, it's the meaning behind it, that it is high risk companies. So they are startups, but high risk startups. So when we, if you look at the Skyway in station number like 1, 2, 3, until we got the land permission from the country president, we were belonging to venture capital market. So we are risky startup market, because there are lots of things company require, and without us to have any land, for example, then there is no way how the company can build a park. If the company would not have, enough engineers or people working the project, there will be no way for Unitsky to build everything himself. So therefore, the certain factors which could be, outside of like direct control zone, and therefore, if the company rely on external factors as we did at the initial stage, it will be belonging to the venture or risky startup market. Stock market, US, UK, Europe, Asia. Stock market is obligations, stocks, anything. Stock market today very popular. There are different platforms where anyone can go today and start investing into blue chip companies. This would be big corporation like Apple or Alibaba. Also, people can trade other stocks. It's a huge market behind it. There are lots of people who invest today into the stock market, and I know that some make money, some lose. But again, it depends what will be your strategy. And remember, we learned on session number 2 about capitalization. So again, capitalization is very closely linked with the investment segments, because once you know what a percentage you need for you to reach your goals, you can have a look what instruments like collaboratively, oh my gosh, what a difficult word, what instruments can give you this certain percentage, and this will be the part of your portfolio building. And we will have another session where I will explain about the portfolios, but this I will be really closely linked with the 20 segment markets, because for some people, they will go for an aggressive portfolio, which means that they will look at the really risky companies. They're really risky, not the companies, risky instruments. But some people, they would want to have much more safer portfolio, like maybe moderate portfolio, where they will look at the less risky instruments. So therefore, this is all related. So whatever information I provide you with, it is all related with last topics and will be with the future topics. So stock markets, I guess everyone knows about the stocks, so we'll not spend much time on this. Forex, also very popular. It's the currency market, open for everyone. There are different platforms when you can either do Forex yourself, or you can give money to Forex managers and they will trade behalf of you. But again, you need to remember that once you give your money to someone else, then if something goes wrong, you will be the one who's responsible, not the person who you give the money to. And this actually written on terms and conditions. So if you would ever decided to give the money in someone else's hands, then make sure you read the contract very carefully, because in majority of the cases, it will be a clause there saying that we're not responsible for any loss, like you or take the full responsibility, because you're giving me your money on your will, and therefore whatever the outcome will be, we're not responsible for that. It's fully your responsibility. So I don't think what kind of why would people, actually I know why would people wanted to do so, because they might not have enough time, and they would prefer to outsource their money to someone else, and they can have a look at now it's very actually popular. There are certain platforms, it's called copy trader or something like this, where you can have a look at the best performances within the trading. It could be Forex, actually, even the stock market. You can select the certain trader or group of traders, and then you can copy. So whatever they do, you do as well. But then again, it's, like in a nutshell, it seems like, awesome idea, let's just copy. But then, first of all, you don't know what risk level they might want you to take. And if you have only 5,000 to trade, and that manager who you copy have, few 100,000 or few millions, then trust me, your trading strategy should be different from his in the first place, because you have different risk level, different amount of money, and the different, even different knowledge. So therefore, idea in a nutshell, it's very good. Copy trader, I think that's how it's called. But if you start looking into the details, then like you will realize that it's actually really, really silly thing to do, because there are certain factors which you might not be aware of. And if you just copy someone who is high performance and do exactly the same thing, it doesn't guarantee that you will have the same result. So therefore, again, in certain countries, actually, it's illegal. I think in America, they put this under illegal activities. You cannot copy a trader anymore, but in Europe it's actually getting now quite popular. So I don't know where would that lead to, but just, you know, bear in mind that it's one of the investment segments. You need to have a bit information before making, you know, decision to put your money on, you know, someone else's pocket. Or even worse, to start, you know, copying, hoping that, you know, if you can do what another guy did, then you will be successful. It is a huge, like it's misleading. Let's put it this way. Real estate, very popular, especially in countries like UK, in London. There are lots of people who link the real estate, especially would be those who purchased the houses 10, 15 years ago when the market price were low. But overall, the real estate is quite profitable because you can either rent or you can buy land, you can start building and you can sell it. There is different strategy which anyone can implement on dealing with the real estate market. But then again, there are lots of misleading companies, include like even Robert Kiyosaki, Rich Dad and Poor Dad. I attended few of his workshop not very recently, maybe like a year ago. And what they were selling is, you know, idea that anyone today can go to real estate market. You know, you don't need to have money. You don't need to have nothing. You can borrow money from someone else. You know, again, lots of people actually believe, and actually I was one of them. And I thought, like, you know, wow, great. I want to be involved in a, you know, real estate market because live in London, you know, great. I don't need to have my money. I don't have like much money to invest in the first place. But then if they can teach me where I can get the money from, then I can, you know, borrow the money, invest in property, and then happy days. And, you know, I'm really glad that I talked with one friend who actually stopped me from doing this, because once you look at this, you know, companies, they might know few tricks, but it is not simple. It is like Andrew said, I made millions in property and then lost in a couple of businesses. Definitely you can make money in anything and everything. You know, you can make money in property, but my point is that it is not something like, it is not an easier. It's not like you just buy property and then you wait for, I don't know, like you renovate it and resell it. You need to go through the processes. You need to learn it. You need to be like, you know, every time with, you know, on the phones, look for the best suppliers, look for the best conditions. You need to take into consideration the taxes. You need to take into consideration, you know, all the details which people you would not even look into. And even for those companies who made this, you know, bold promise, you can go to real estate and you don't need to have your own, you know, money. It is not true, because what they will ask you to do is to go to, you know, banks and take the credit cards and loans. And then they're saying, well, you're not using your money, right? I mean, again, this is so misleading. And today we have this, you know, the huge bubble, and this bubble full of promise to people to make easier money. And there is not an easier money at all. Even you doing the Skyway, tell me, is it easy? Like, you just wake up and you do nothing, no recruiting, no talking, no presentation. It is a bloody hard job, you know. It is not so easy, and it never will be. So therefore, when you look at the real estate market, it is definitely interesting market, especially if you feel like, you know, you want to be involved in this, and, you know, it's your passion about properties, then definitely real estate will be the right market. But if you think like, you know, I want to just invest to make easy money, it is not the truth. But actually, there is another tendency that's there are a few startups I seen from last year onwards. That's what they do is they understand that today generations like millennials, they are between like 30 and 45. They kind of, how to put it the right way. So these millennials, they are new kind of their generation where people like we probably majority of us fits within, you know, from 30 to 45. So we are looking for, you know, we might have some knowledge about the investment, we might have some knowledge about, you know, what's going on in the world, but more likely we don't have any big savings. More likely we not necessarily have any real estate or equity to own, and more likely these are people who wanted to be involved, you know, in a big market with a, you know, mission, to have a vision, to want to belong to something bigger than they are. So that's how they that's how they described, you know, those generations. So it's been created in the market, like for the past year, different companies where people can own the real estate, but you're not owner as yourself, you own this as a group of people. So you might have like 100 people who will invest in certain property. They do a bit of, you know, crowd investing for that, and then you own piece of property. And it could be applicable for new builds. And once, let's say you build 10 storage house, and you have, I don't know, a few thousand people who invest in 10 storage house, and then once this 10 storage house is rented, that's how you can make your little, you know, dividends. And then you can, if another person decides to sell his part of the flat, then you can buy, and you can have a cheaper option to buy, because you're already internal within this group. Syndicate, yeah, probably syndicate, that's how it's called. So it's, again, really good idea to start with, if you don't have, you know, much money, and if you don't want to be involved in a real estate investment in a full time, then probably this option will be more applicable. So you can have a look at the different companies who done it. And I know a few of them in London, and for the past few years they've been doing, you know, really, really great. So maybe that will be more applicable, where you'd have to spend lots of money. But again, it's completely your call. The purpose of this one is just to give you an overview what's going on in the market and what are the investment instruments we have. Number 10, internet and online technologies. Again, very popular. And if you look at the biggest return today, they would come from internet and online technology sector. This will be like our Facebook and Alibaba, eBay. This will be any application market, like anything related to new technology. It's nanotechnology. It's, you know, different companies who fighting with what is called with the pollution. These are ventures created to benefit the world. And as I'm said, there is, you know, people who looking today not necessarily be company for the money's sake, but they wanted to be involved in a company with bigger vision and mission. So the online technologies and technology market overall, they are the best market today, because they can provide you very good returns. And majority of the cases, they would have some, you know, solid idea, you know, why this technology is it's needed, and why this technology, how this technology can benefit the world. Of course, there are lots of technologies which will never see the light, and it's completely fine, because if every single startup would, you know, become a multi-million business, it just would be simply impossible to have. So you need to be realistic, but 1 out of 10, probably the businesses that they will have, you know, very good foundation where you can have a look into. And Skyway Technology, we also belong to technology market. It is not just, it should be online technologies, technologies. And so in technology market has played a huge role in today the world of development. Number 11, precious metals and stones. Again, very interested market. For you to be involved in this market, I would advise, for whatever the markets, whatever these 20 markets you see, the number one is you need to have a passion about it. If you're not passionate about, you know, precious metals and stones, then it will be really difficult to make success out of the business if you don't care about, you know, if you don't care about it in the first place. So that is why people who today involved in the Skyway Technology, and they all passionate about how this company can change the world. And that's why we're so successful. And that's why when we wake up in the morning, we understand that we're doing this for the good cause, and we do this because we wanted to contribute. Same with the precious metals, same with the other markets. If you feel like you're excited about it, then definitely a good market, because if you look at the historical data, precious metals and stone, this is one of the markets where they slowly but surely they're growing every year. They have some drawbacks, but if you look at the statistics overall, this market always performed very well. Number 12, bonds. Bonds will be the legal the legal documents or legal paper which provided you that your investment will be locked for maybe like 12 months or two years. Usually the bonds can be issued either by company or even by the government. It could be local government, or it could be wide governmental level. The bonds are very interesting investment segment, because they are guaranteed. When you purchase the bond, it will be certain timeframes outlined, and it will also the company or government, they sort of borrowing money from you, and then after 2 years they give you your money back plus percentage. And each bond you need to have a look. I guess differently. Very recently at BMW, they had the bond. It was very funny everywhere in news that it was really ridiculous, offering something like there is a bond for I believe it was 3 years, like it was very long bond, and then if you invest on this BMW bond, your investment, or maybe even Ford, I don't one of them, either Ford or BMW, your return was like 1.2%, something like this. Like, how ridiculous is this? Like, you're looking for the big corporations. I believe it was BMW, and you think, wow, I came across really, really cool instrument. And then you have a look at the returns, like 1.2%. Like, are you serious? Like, why would I keep your money in your company? I borrow your money and you provide me 1.2%. Like, just, ridiculous. So very interesting market. I haven't yet myself looked at this at the bond market from investment point of view, but definitely something I'm keen to do, and I wanted to explore more, because it will be good to have a bonds as the guaranteed investment in your portfolio, because they are guaranteed. Art, investing in art and culture, let's put them together. Again, very popular category. There is few years ago, last December, I attended the conference, Eric Worre conference. It was Tony Robinson. He talked about investment also, and if you haven't yet read the book, I recommend new Tony Robinson book. Please do so. It's very useful. So he gave a really good example of the art and culture investment. It was a guy, not very famous painter. I don't remember his name though. It will be good to know. I can Google it afterwards. So what he did, he painted the picture with his blood, and then once he died, it's become like super expensive, because it's like no one done it before. An idea of you have piece of painter after he after he died, and lots of people all of a sudden they start showing an interest, and they wanted to buy his art, and again, it's very interesting market. There are lots of examples where all of a sudden from unknown artists, like the works become very expensive and they make the fortune. But again, you need to be in a circle where you talk to people, you understand what are the latest trends in the market, and then you would be able to also make the good money if you are feeling passionate about the art and culture overall. And also very popular today, the sponsoring trips. For example, if you have artists coming from America, and I know that there is enough demand for this artist in UK, then I could organize sort of the conference where I pay artists whatever his fees are, but then I will sell the tickets to cover all the costs and fees, and whatever I left, it will be my earnings. So it is a business, but at the same time it's also you can look at this from investment point of views as well. And there are I've seen few companies who actually collect the money from people. Also, they do a bit of crowdfunding where people can be involved in this movement. You can, like help and sponsor your and invite you, or not sponsor, invite you favorite singer to your country, and then plus you get some percentage from the ticket sale. Again, investment, yeah, could be interesting, could be for those people who has a passion about it. Mutual funds and hedge funds, they're very popular. The only difference between the mutual funds and hedge funds, that's for a mutual fund, you need to be qualified. So it's only for qualified investors, only for not qualified, accredited investors, because they're much more risky. And also, oops, sorry. Give me 1 second. What's going on? Okay, guys, can you see my screen? No? What have you done? Press something. Okay. All right. So, can you see my screen now? Yes. Perfect. So, mutual fund and hedge funds. One more time, this will be managed by professionals. So you're not necessarily actively would be involved in your portfolio building and selections of the instruments. You can suggest your mutual fund manager where to look at, or maybe if you're looking for a specific like a green investment, then you can request that you wanna your portfolio being like 10% consists from the companies deal with the solar panels or something, with the green like relationship to green environment. They can manage that your behalf, but usually it depends on your risk level. There are going to be different proposals where the company, the fund managers, they will look at the different best performance funds, and they will put the portfolio for your behalf. The other thing is, when you look at the mutual funds and investing, you need to remember that it is also long term. There is no point of investing in a mutual fund if you're looking for 3 years of investment, because first of all, every time you do any transactions, every time you alter your portfolio, every time you take investment off and then add something on, then you will end up paying you will end up paying fees. And again, Tony Robbins, what he did in his work, what's the name? Unstoppable, I think the book is. He actually interviewed the top mutual funds in US to see, how they make money, and he interviewed, lots of people related to investment world. And actually, what he realized that mutual fund will always make money regardless. If market can go up and down. There's going to be, in majority of the cases, unfortunately, there are going to be, hidden fees where people, they don't even, it's not going to be on paper, but then every time when you do any movements with your portfolio, you will end up paying fee. Every time there is a certain fee, even apply on a monthly basis, like they call it a sort of service fee. Like lots of things which they will never tell you upfront, and you need to look at the documentation or terms you sign really, really properly, because it will be worded in a way that you would not even realize that you get charged certain percentage. And what Tony did in his book, he actually he selected the few mutual funds, and he actually compared that people, they were not even making like good percentage. He told they were making like such a silly money. They could have make even better money by investing into bank account, like ISO saving account, but the way how people were sold the idea, was like, this is the best fund. We have a 30% yield every year. This are the company, the best performing company. So it's lots of manipulation was done to people. And he published actually this book where he gave a few recommendations where you need to look at in what are the good companies, good mutual funds where you can have a look and invest, because he interviewed owners, he interviewed the founders, and he realized that there are only a few companies in America who would actually be very upfront with the clients and who put the client's interest on a top priority, not their own interest. So mutual funds could be one of the tools of one of the instruments to invest into, but then only if you look at the long term. And hedge funds, as I said, it's very similar, but you have to be qualified for you to be part of the hedge fund. Only accredited investor can put the money in the hedge fund, and usually the hedge fund investment started from a few $100,000s and more. Hypes, do you know hypes? Can you give me maybe example, or can you give me the definition, what hypes means? Hypes. Yeah. Hypes, yeah. You see, this is Russian style. Hypes, high risk. Yeah, correct. High yield investment program. Bitcoin mining. High yield. Well, it's Bitcoin mining could be, but it could not. It depends. So the hypes is actually as you correctly said, the high yield investment programs. But also, unfortunately, hypes in majority of the cases will be like Ponzi schemes and pyramids, and that's why they, could be major scams. Usually Ponzi's. That's why the high yield investment programs. So there are usually the lifespan for hype could be like 3 years, or up to 3 years, and then usually the company will close the accounts, and
what they did,
hello
they gave to local people around the Panama Canal. I said, okay, we don't have money. If you work here, you'll get something in share. There was nothing as share. I said, we're going to give you some contribution to the company. And you know how much money they earning, these people? And they're not ever in their life, like their families earning $1 million+ per year from Panama Canal.
Imagine, right?
I'm talking about old one to make you a reference that when you work at something that has a solid base, a foundation, it is not just for you, it is for your generation as well. And this is what you have. This is what you have.
Hello?
No, this basically that's what happened. There's a lot of people work for free for years and years, and they made it happen. And the Panama Canal, and a lot of people are actually getting. You can go on Wikipedia, read about it, and you'll be fascinated.
No, absolutely. And I mean,
okay, cool.
Thank you for sharing. And actually, guys, yeah, feel free to, like, I can see that.
So right now you have that sort of that sort of things on front of you. This is you making 3-level commission without investing a single penny from yourself.
Hanif,
so
are you?
Which other network marketing you can do that? None. You have to buy product first before you can make commission.
I'm wondering if he's talking to us or he's talking with someone else.
You don't have to buy a product as long as you can bring investor. Invest, doesn't matter. Invest $10 or $100,000. You'll make the same commission. You still make 7%. Muhammad brother, he never. Asif brother, he never actually bought share.
Someone else, Mila.
You see someone working in the kitchen during the session as well. Oh, funny.
Okay,
well,
I will mute him.
Yeah, I already muted him. Yeah,
okay.
I was like, okay, that's good that he shared about the Panama Canal. I was like, that's how this linked with the hypes. Okay. Funny. So again, hypes, as we went through, this will be, the companies where usually they promise very huge investment as like return on the investment will be like 100%, so 1,000, not 100%, like 1,000%, and more and more. And this I usually would say, like, you don't need to recruit, you don't need to work hard, you don't need to do nothing. You just you know, sit and wait and look in your back office as money multiplying themselves magically. It could be, you know, if you're looking for short way to make money, hypes could be, you know, also considered as one of the investment segments, as far as you understand that it is hype, as far as you agree to go to the risks related to hypes, and as far as you're not promoting the hypes among other people. Because if you know that it's hypes and you promoting, then, you know, you're part of the dodgy scheme, because then you knowingly promoting something which you know would be, you know, not there for a long time, and you just, you know, end up selling, you know, people dreams and make the bold promises. So this is definitely, you know, not the way to look at it. But from investment point of view, if you wanted to have, you know, portfolio with them high yield, then you can add few companies like hypes who, you know, there for only short periods of time, and you can have a look at the hype investment maybe like a year, only if you recognize that, if you understand the risks, if you understand that this company would not be there in the market for a long time, and you happy to be involved in certain businesses. Because there are some people who would say, you know, I don't want to be involved in hype because it just like, for me, I don't want to invest in dodgy company, especially if I know this company is just here to make the money and leave. It could be, you know, also maybe right for some people. If you look from investment point of view, if you build in your portfolio, could be short term, and then you look at one of the hype instruments for short term, maybe like under a year, then why not? I don't see that nothing wrong with it, as soon as you're not, again, not promoting it, as soon as you're not mislead, and like you're not trying to recruit people in hype, because then you're harming them, and that's completely unethical to do. As soon as you just only invest your money and you leave, then it's one thing. But if you take responsibility and promote the business, and you know that it's hype, then it's completely unethical thing to do. Is OneCoin is one of them? I guess, Harun, it's, you know, there are different theories about the OneCoin, and, you know, why they do what they do, why they promised that they will go to IPO, you know, a few years ago, and they still haven't. Why they talk about the blockchain, and they talk about machinery, but then no one ever seen they manufacturers, or they never seen the machineries. I don't know. There are lots of things about the OneCoin. I'm personally not involved in OneCoin at all, because I don't want to invest in on something like an air. I prefer to invest in something more tangible. And but that's, again, that is my opinion, and I don't see how people today can, you know, make money through the OneCoin. They just, it's funny, you know. The funny story. One guy invited, like, imagine we have what is called one of the like speakers training how to become millionaire. It's like a fun story. So the guy invited, you know, people to attend his training, and he has you know, 10,000 people in the room. And he said, oh guys, you know, thank you very much to come in for this event. This event topic is, you know, how to make your first million. Do you want to know how? And people like, yeah, we want to know how. And like, it's really simple secret. Are you sure you want to know how to make, you know, 1 million, you know, over the night, without you doing, you know, much at all? You don't even have to have a product. You don't even to sell anything. Like, do you want to know how? And people like, yeah, of course we want to know how. Like, we're here to learn it. And the guy said, you know, very simple. You rent the venue. You have 10,000 people. Each of that people pay 1,000 per tickets. Congrats, you're a millionaire. You know. And that's, you know, how so many like people, like so many businesses, the basic same idea. They sell tickets for you to come to the topics to learn how to become, you know, the millionaire. But then for you to know how to become a millionaire, you need to organize another conference when you're going to have another people who would invest money in you, so you can teach them how to become a millionaire. You know, it's so fascinating. So if you want to become a millionaire over the night, organize the conference, how to become a millionaire, 10,000 tickets, 1,000 per tickets, and happy days, you're a millionaire. Yeah, funny, but you will be surprised, how many of these, dodgy entrepreneurs they use it. So the management, going further, it's where you trust your money into third party. It's not necessarily be mutual funds. It could be a completely different company. It could be even a consulting company. Could be a trust. There's like, especially in Australia, I know the trust management is very popular, where they can manage money on your behalf. Crypto market, it's very popular. I think everyone today understand what is the crypto market. There are hundreds of different companies who promote, next Bitcoins and stuff, include the OneCoin and other coins. So crypto market is again very interested. Very good to know like why the background of the crypto market. I will not go through this much more detail, but just again for your general knowledge, it will be good to know what sort of investment you can get through you investing into crypto market. And usually people today, they have like, I don't know, probably 70% of investors I came across today in our company, they have their money into crypto. In myself, I also have some coins which I believe might give a good returns very soon. But again, it's only part of my portfolio, so I would not necessarily just based my portfolio just in the crypto market, because there are lots of companies almost every year. They have a different coins, different what is called you have coins and you have a digital currencies, which are there for the reason, but then you need to learn the company background, and you need to understand what you invested into. And one of the rules, diversify, absolutely. And that's why we're going through the session today. So by the end of the session, you would at least know 20 instruments, 20 segments where you can invest your money into. And one of your homework will be is to, out of these 20 instruments, to select 5 which you think you would like to explore more. So, and the last one but not least is charity. Again, very important. I invest into the charity, so many years, and I still do. And I think it's very important for everyone today to have a charity as one of the segments where you invest the money into. For charity, of course, you're not expecting, have 1,000 returns, and you're not expecting to have high yields, but the charity does magic. It's very simple, but it's really magical. So when you invest in a charity, you invest it, or you send your money for the good sake, right? So you want to save their lives, or maybe you support cats and dogs charities, or maybe you support the refugee charities, or who knows, maybe you support the recent like tsunami charity or Red Cross or whatever it is. But you do this for the good sake. You do this because you wanted your money to do something good for other people. And it's very important to have a charity in your investment portfolio, because it's honestly will do the magic for you. The more you give, the more you receive. And apart from any other instruments, the charities, you just give not necessarily money. You can give products. You can give your time. You can spend maybe weekends and do some work for your local council or something. Like, charity is a very broad topic, but the idea behind it is that you contribute your time or your money or other, maybe your clothes or something, for the good sake, not necessary for returns. But as the result of it, the more you give, the more you receive. And this law of universe, working every time. The more you give something without any expectations, the more you will receive. So I want all of you to have a look at these 20 instruments. Write it down, the 5 which you think you would be keen to invest into. Remember that charity needs to be one of them. and education needs to be one of them. These are two compulsory. The rest of it, you can select what you think it's resonating with you. And next session, when we talk about, you can do 7, like the minimum is 5, because usually like people who are not yet involved in investment, like they need to dig a bit more detail and see which one will be better for them. But if you have 7, then even better, because then your portfolio will look like, the more segments you have, it's better anyway for differentiating your portfolio. So have a look at the 5 or 7. If you have 7, take the print screen, and next session, next investment session, we will start with this, what have you selected and why you think that you would be successful in this specific segment. Yeah. So have you learned something new? Have you learned something, was it useful for you, this part of the training, when we talk about 20 different investment markets? Okay, perfect. Thank you so much. And now it's going to be one more topic, which is very, very important. So now you learn about investment segments. Now you understood what are they, what is the difference between investing money into Forex or investing money into real estate. You understand that there are certain, risks involved. But now let's have a look how what is the frame you need to have in your mind for you to differentiate if this is the right instrument for you or not. And we have a look on this session on classification, reliability, liquidity, and yield of the investment. So these are foundation for you, which you will take as the frame, and you will go back and apply for each instrument you'd selected. So let's have a look on all of them one by one. Okay, the first classification. There is, if you look at the segment, there are 4 main classification types, which you see from the slide. First of all is guaranteed segment. Second one, low risk, moderate risk, and high risk. And of course, each segment means a certain returns. Each segment will mean certain risks. And we will have a look now on the detail with examples. So what means guaranteed segment? Guaranteed segment means that there is no risks, or they might be very limited risk. Example of the guaranteed would be deposit in state-owned banks. You see, state-owned, not like local or street banks, state-owned banks. So investment into state-owned banks, and you can have a look at the different bank classification, like A plus, B, and etc. etc. If you want to know where to look for this data about the classifications of the banks, then PricewaterhouseCoopers, they post every year the paperwork where they provide the updates on a global scale about the banking industry and what banks are the top rated banks. So definitely very useful, especially as you now know, we're looking at the investment from international point of view. So if in your country or in your region you don't have the opportunity to put your money in state-owned bank or in a good A plus, like a AAA bank with a good rating, then there is an always opportunity that you can invest in different countries, and that will be a very good strategy, because in certain countries, like in Russia for example, they can provide extremely good returns when you deposit your money in state-owned bank. I believe the Armin told me that his current investment gave him like 12% a year for him to invest in bank, like to keep your money and deposit your money. Like 12% is like amazing, right? But in UK, for example, they don't they don't have it. We also, like Andrew said, we're lucky if you get 4. In UK, it's even lesser than that. I invested into banks like a few years ago, and I only earned like 2.5%. So it was like really, really low. But in certain countries like Russia, 12%, it's it's guaranteed. So not bad. But you see, you will only know that if you start looking into it. So my call is to you, don't just be stuck in your market, not just being stuck in, one country. Always look at the like investment as more international venture. And the good thing that we all here from different countries, so we can really, really help each other and, guide each other and, make the more wise decisions, because we all represent some countries and we know the, bigger picture, because we can be from inside. So deposits in state-owned banks, cumulative programs in the insurance business, again, only if they, the reason why I said cumulative, because they tend to provide you with the better returns, and they are guaranteed as soon as you not breach as soon as you not breach the contract terms. Bonds of the state loan, again, when it comes to the state or the government level, these are guaranteed. And I already mentioned to you that if you look into have a portfolio with a very safe, less risks and guaranteed, then from classification point of view, you need to go for guaranteed, which are the less risks, and these are the one you see in front of you. So bonds of the state loan, cumulative programs insurance, deposit in state-owned banks, and property for rent. Again, property for rent, it says here it's guaranteed, because once you have a tenant, every month, you will have the money coming to your account. But again, it needs to be a very good property at a very good state and very good location. So then that's only how it will be guaranteed. If you have your property somewhere miles away in the middle of nowhere, then of course, even if you're gonna put your property on rent, there's not gonna be a guarantee for you at all. So we're talking here about the good locations and the right property. But these are four main types of the investment where you can receive your investment guaranteed, right? So take the print screen, and this will be a guaranteed investment tools. Next one, low segment proposals or low segment investment proposals would be anything where you can your losses could be from 15 to 50%. Example could be corporate loan bonds, because the corporate, again, as I'm said, it could be not necessarily guaranteed. The guaranteed only come from the state government and governmental level, but corporate loans, they can provide you certain returns, but then they will be much more smaller. And then certain bonds also, there will be a clause that, once if the company will not reach certain performance, then the projections would be different. So you might not even receive the returns you initially would want it to. And then the last one, precious metals and stone. The reason, again, because it's low risk, because usually precious metals and stone, the market is quite stable if you look at this from long-term investment. But if you look from the medium short-term investment, then this market can give you you can incur some losses as well. So that's why if you look into low risk segmenting proposals, you can include those two, because then more likely in the long term you will see your yields and you will receive your profit. But at the same time, they are not guaranteed, because in the precious metals, again, it depends how you invest, what companies you invest. Are you buying actually the craft material, or maybe you buy like gold rings and some jewelry? So it's all depends. But these are considering as the low risk segment investment proposal, because in the long term they would always show the good results. Number 3 is moderate risk. Moderate risk will be those who can provide 50 to 70%. I don't know why it's not the lows from 70. It would be it's incorrect here. Okay, I got it now. So they look from because usually I would look from the gain part, but this one is from losses. Okay, never mind. So the moderate risk would be those who are Usually either short-term or medium-term. Moderate risk segments, they're very unlikely that there will be really, really long-term investment, because once investment is really, really long-term, it would mean that it's either already exists in the business, where they might look into like invest into I don't even stock markets. It could be for very long time if you're looking for the company who've been in the market for the next like 15 and 20 years. But also you can look at this as the moderate, like as a medium term, and then it will go under the moderate risk investment. And moderate risk segments will be forex, palm funds, palm accounts would be managed by someone else, trading and financial markets. So it's anything which anything which you look at from medium and short term, that will be the moderate risk, because only those businesses or those segments who are there for the long term, they're the one who can provide low risk and guaranteed, because they've been there for a very long time. They have a history, they have a credibility, they've been in the market, there is lots of statistics behind it. So only long-term investment can be guaranteed, only from long-term perspective. Whatever it comes to the medium term or short term, it will be either moderate risks, which I just mentioned now, forex and stock markets, or high risk. It's also very small term. So we're talking about trading in currency, derivatives, stocks, hypes, shares of stock funds, index funds. So anything where you can get really good return, but you also will receive a very high risk. Yeah. So these are 4 main segments. And of course, again, it depends what is your risk appetite. It depends what is the percentage you want to gain. You will put your portfolio together, mixing, high risk, medium risk, low risk, and guaranteed. But this is regarding to classification. Then let's have a look at the reliability. Reliability, it's not just the one factor. When we talk about how reliable this investment, we look at the components. So we're looking at the yield, at the guarantees, at risks, and liquidity. If, for example, if I look at only yield, can I really tell if this business will be, or this investment instrument will be reliable for me to invest? Let's say I only look at yield and guarantees. Would that be enough for me to know if this instrument is good or not? Guys, are you here? No. Andrew, I feel like, it's just me and you here. No, it's Philip and Manjula. So we have a session between us four. Yeah, exactly. It's not enough. When you look at how reliable this instrument, a certain instrument is, you need to look at the 4 factors: yield, guarantees, risk, and liquidity. And these are 4 factors been there as important only quite recently. If you look at the investment as it used to be like 10 years and 15 years ago, the people would not usually look at the liquidity at all. Because if you look at the market, how it was, like 15 and 20 years ago, usually people, had a job, right? So a job was guaranteed by government. So once you graduated from university or from college, the government provides you with job guaranteed. So people know that, once you're in a job, it will be a contract for next 20 or 35 years. And you know that every month you have a certain duty to do, and you know that every month, by the end of the month, you receive the certain salary. This is guarantee. So people at that time, they were more keen to look at the investment instruments, but they didn't bother too much about liquidity. But in this current market situation, where we're in the middle of uncertainty, where people don't know what to expect tomorrow, they have to look at the liquidity separately, at the yield separately. Yield is directly linked with the risks, and risk are directly linked with the guarantees. So all of these 4 factors are crucially important for you once it comes to the understanding if this instrument is the right for you and reliable. So let's have a look on all them independently. What is yield? Yield is the income return on investments, such as the interest or dividends received from holding a particular security. The yield is usually expressed in annual percentage rate based on the investment cost. If you talk about the like banking sector, probably the most straightforward, there is certain yield or percentage they promise you by the end of the contract. And as we established now, in Russia it could be 12%, in Australia it's 4%, and UK it's 2.5%. So this is the yield they provide you with, like your money, you will get your money back plus this yield in the top. Yeah. Let's have a look at what instruments can provide you with a better yield within the 5 years of return. Bank deposit average could give you, in a 5-year span, could give you a 50% of yield or return. Insurance also could be up to 50%. Then forex market, it's more, more risky, so therefore yield is higher. Same as stock market, real estate. But if you look at this, the biggest yield or return can give you from the most risky segment, which is startups and venture companies. And remember, just a few minutes ago, I explained the classification. So can you put in chat venture companies and startups, what classifications they will belong to? Startups and venture company, what classifications they will belong to? Yeah, correct. High risk. So if you look at the venture companies, they will be here. When you can lose anything from 50 to 70% or even higher of your portfolio. These are very high risk and it directly linked with yield. Usually, the higher returns are, the greater risk will be. And the places where you have lower risk, the returns will be lower. And this is just, this is how it's the way it's created. The higher return will be, the higher risk will be involved. The lesser return or lesser yield will be, the lesser return will be, the lesser risk will be. Yeah, so I think it makes sense. It's, yes, quite logical. Second one, it's liquidity. So what is liquidity? Liquidity describes the degree to which an asset or security can be quickly bought or sold in the market without affecting the asset price. Market liquidity refers to extent to which a market, such as a country stock market or real estate market, allows asset to be bought and sold as a stable prices. Market liquidity, it's slightly advanced, so we don't sort of need at this stage to talk about the market liquidity, but let's have a look at the liquidity itself. So what do you think is the most liquid instrument today? What is the most liquid tool? You know that. Any other options? What do you guys think? The most liquid. What could be the most liquid tool? Okay, well done, guys. Of course, cash. Why cash? Because you can easily sell, you can buy, like cash is very liquid. You can easily turn cash into something else. Like, for example, if I decided to buy, I don't know, property, and I have cash, so I can go and I can have a deal with a real estate agent, so I can pay cash and they provide me with like keys from my real estate. But then tomorrow, if I decided to sell my real estate, can I just go back and say, okay, give me back my cash? Of course not, because then it's going to be a longer process. I need to fill up the documents, I need to pay like extra taxation, I need to look at maybe get internal advisors like involved who will evaluate or re-evaluate the property. There is going to be certain processes to put in place before I get access to cash or before I sell my property. So therefore, yeah, cash is the king, and that's why I think it's that's the expression this exists, and cash is the most liquid asset. So whatever, if you have cash, you can always turn it into something else. And the easier is to understand, like liquid, it means like water, you know, something like very flexible. And what is the very flexible today is only cash, because you can have a pounds today and you can go to the bank and within 10 minutes I can convert them to dollars, you know. It's very, very flexible, even to different currency and different, I can always buy different instruments using cash, but not necessarily, you know, vice versa. I cannot go to bank with the gold and say, okay, I wanted to, I don't know, I cannot go to shop with a piece of gold and say, can I buy the milk and bread? You know, they will look at me like, what are you talking about? But with the cash, I can. So think about it. Cash is liquid, the most liquid tool, which means that it can be bought or sold without kind of very easy, without affecting the asset price. Well done, guys. So liquidity, usually if it's not, it could be also put into different categories: low or no liquid, low no yield, or moderate liquid, moderate yield, and highly liquid and highly liquid, highly profitable. Usually the very usually if you're talking about you know, liquidity and yield, they always would be connected, because there are certain investment instruments which could be, you know, with very good yield, like for example invest into even the Skyway, right? So the yield is great, like the returns 1000%, it's like awesome. But how liquid the Skyway shares today? How liquid the pre-IPO equity shares now? Are they liquid at all? Can you tell me, if you look at the Skyway, how you can classify the Skyway invest in like instrument? Correct. So it's not liquid. What about yield? Is it moderate yield, low yield, high yield? High yield. So the Skyway investment today is not liquid, high yield, venture capital market startup, which means the risks are like, if you differentiate our by risks are high. Correct. So now you see, now we put Skyway into the frames. So now we've put, you know, everything together using the classification, reliability, liquidity, and yield. So only after you have all these factors together, then you can make, you know, your decision, whatever it is the right company for you to invest. And how to test this instrument. So now you put the Skyway into classification, but now you need to look at, you know, okay, what else I need to learn for us to understand if this specific instrument is worthwhile to invest. Philip said, but now it's not very, very high. Kind of, I agree with you. We already done, you know, 2/3, but still, you know, if you look from investment point of view, we don't have any sort of established history of success. Unitsky never took the companies to IPO. You know, there's few things which we haven't yet done it. So this is the first time. And as anything for the first time, it's lots of things can go wrong. So therefore, we can have a look at this from, you know, not very risky, but it's still, once technology is certified, then we will move to, you know, moderate risk. But because we have no certification, we have no outside Skyway roads been built, we're not an IPO yet, we haven't completed the technology, so it's still, if you put all these factors together, it's still, you know, still risky. Like, you can provide the people all facts and figures why they should invest, so you put the risk level, you know, like a bit down, because you can address with the facts and figures. But if you look at the instrument as if from a classification point of view, then we still sit on the risky stage, because lots of things are not yet completed. Yeah. Okay, the yield isn't really there. The returns is in a network, not on pipes. Of course, and here you need to also like differentiate. So we're not talking about marketing side. We're not talking about multi-level marketing, because that's how you generate return now. But this is not return on your investment. So when we talk about in this session, we're talking about the investment. So this will be high return once the company goes to IPO, right? So when they go to IPO, and once, or at least the internal market will be open, that will be the exit strategy for shareholders, so they can sell their stocks. Exactly. We're talking about now, and for now, from investment point of view, there is no yield at all. So at the moment, not. But if you look from the marketing, that is different, because then we're talking about the business model. We're not talking about investment instrument. Cool. So how to test instruments? So now let's say like with the Skyway, so you understand that it is high risk. There is no liquidity. There is potentially high yield, but at the moment, as you invest, there is no yield, because that's why you invest money. So you project it to your returns. So potentially it's going to be high yield investment, but there is no guaranteed. So now we need to look at these questions, which will be able to kind of for you to make the right decision. So first of all, you need to look at the website, at the presentation content. What is the details on the website? Do they have a website? Is it fully function? Do they have the presentations? Can they describe the project? What are the contact details? Do they have the offices? Can I call them? Can I see them? Can I knock the door? Would someone be there? Are they even exist? And means do they have office? Do they have a license? What scheme they use for raise the funds? Do they have fully operated back office? How easily it's invest through the back office? How easily it's to navigate through this? Yield, again, what will be the projected yield? What are the factors which will influence on the yield? What are terms and conditions? Do I have to pay now? Do I have to? There any monthly fees? Is there any terms and condition when I can withdraw? Are there any guarantees? Can I don't know, invest money today, and can I change mine tomorrow? What is the market exposure? Are they only work with Russia, or they work with other countries? To what extent? What proof they have? How many years in the market? What is the history of the company owner? Is he the 13 years old guy who has a great idea, or he been in the market for so many years and he's professional? Who are the people working with him? Who are the board of directors? How many years company been performing in the market successfully? Are they already existing business and they're looking to expand? They have a good track record, or they completely new business? If they completely new business, then the idea how suitable is for the world. Can they provide the solution for a specific problem maybe today world has? So you need to see how company vision fits to the current reality. Are they useful? Do we need this product? And company management, like who are they, what they experience. So I went through this super fast, but these are basics which you need to ask yourself every time before you make an investment decisions. So that's how you test instruments. So you go back, first of all, to the slide when we talk about the reliable, we talk about the guarantees, risk, liquidity, and yields. It was reliability, so we're talking about the, let me go back. So we're talking about the yield. Yeah, correct. Yield guarantees risk and liquidity. Once you know this, you move into that slide and you start finding answers for all this, not one or two. You need to find the answers for all of this. And if your answer is satisfactory, if you can provide all the information on this, then only then you can make a decision. If, for example, out of this 1, 2, 3, 4, 5, 6, 7, 8, 9, out of this 9 question, I can only answer 2, then for me, it's a definitely no-go, because it seems like it's, a pyramid, or they're hiding something, or they're not providing, or whatever the reason, but it's not go for me. Like, you need to also, again, have your risk appetite, and you need to understand, even if it's hype, right? Even if it's hype, we're talking about the high yield investment, like pyramids, or even it's Ponzi scheme. If I can go through this and it makes sense, for example, okay, company management, guy been previously involved in dodgy businesses. Okay, I know that, right? So this will affect my decision, but at least I know information. How many years in the market? They've been 1 year in the market. Okay, so potentially high risk, they usually statistically 3 years, so potentially have maybe another year or two. Market exposure, they only work in like in Europe. Okay, well, Europe is a big market enough, so I guess depend what they do, what product they sell, I can also take it. What are terms and conditions? Do I have to invest on a monthly basis, or I just invest and I click, I invest, I sit back? Like, what I need to do? You see, it's, you don't need to have all positive answer on this, but the sake of this exercise is to have answer, whatever they are negative, whatever they're positive, whatever they are, I don't know, any sort of answer, because these are very important for you to realize if you want to take this risk or not. And I previously been involved in a company which unfortunately they went like bankrupt. I was not involved on the business side, but rather from just investment point of view. And I knew, for example, that, you know, the guy, company management, he'd been involved in a few pyramids previously. So it was, you know, just a matter of the time when the company, you know, in one day declared the bankrupt, because it was, you know, too good to be true. But I knew that, and therefore, you know, I was happy to take this risk on board. So therefore, you know, once you know that's these answers on these questions, then you would be able to have a better decision from, you know, whatever you want to invest the money or not. And again, I'm not talking here about the business side at all. I'm talking about the investment point of view. Yeah, so there are different companies today in the world when you can invest the money in. So they all have their own pros and cons, and only you can decide what instruments are better for you to invest and what instruments you're more keen to explore. And it will directly be linked with, first of all, with your risk appetite, whatever you want to risk, or whatever you want to, not to risk, whatever you're looking at the long term, or whatever you're looking in the medium or short term. It will depend on all, these factors, but then from your point of view. So if you're the person who's looking for something very liquid, with their guaranteed and very liquid, then the only thing would be is to go for this ones, for guaranteed segment, because there is no limited risks, no unlimited risk. And if you, for example, invest into deposits, but then not fixed term. If you invest your deposit in the flexible term, then you can have your guaranteed part, but also it can be quite liquid, which means that you can always withdraw. So that's, only risk what you can afford to lose, correct. So that's how you can use this, what we learned today as the foundation for you to, first of all, get familiar yourself with the different instruments. Because as Andrew correctly reminded, one of the rules of the private investor, it's here, it's about diversification. So now we know with you the first one, we already been through this, explained. We know the private rules, we know how to do financial planning. So now it's all about diversification. And you as investor, for you to be able to look at the different opportunity, you need to know where to start with. What is the start base for you? The first is to learn about what are the segments, what are the instruments they are available. The second is to learn about liquidity, yield, reliability, and classification, because you need to know how to evaluate the certain instrument. You need to know if this will be feasible to you. And if before maybe you never heard about liquidity, so then your judgment or your decision will be not constructive, because once you put liquidity away, decisions, it could be completely different if you knew about the liquidity. So now I gave you the brief of the instruments. I provide you with a frame which you can apply, and you can classify, use the liquidity tool, guarantees and risks, to understand how reliable it is. And the last one, but not the least, is this one, how to test instruments. So before you decided to go ahead, please make sure that this is your to check list. And once you run all your instrument segments or all your instruments through this test checklist, then you would be able to make very wise decision, and you will be acting as the professional investor, because most of the people today who even into the investment, into the forex and stock, they have not even clue about any of those. If you ask today about what is yield and liquidity and risks and how can they be classified, I don't know, 80% of the people will probably tell you, I have no idea what you're talking about. And these are people who take your money, and they start trading into forex and stock exchange in the different markets because they're so-called professionals. So if you want to make the money, always be internal, always be the one who take responsibility, who make the aware decisions, and the person who can apply everything into certain frames and make a decision which is suitable for your hunger and suitable for your risk level. So that's pretty much for today. Never put eggs in the same basket. One of the mistakes I made. Perfect. Well, now you know. And even like in Skyway, we will never recommend people to put everything, all the investing and savings into the Skyway. And we had a call with Andre actually on Monday. He was really upset. In Russia, there are a few people who, they did the presentations in a way that they really manipulate, with this urgency that we went to next stage. And Andre came across that, some people, they sold the cars, and they sold, some very valuable stuff for them to have a cash so they can invest in Skyway. And he was so angry with this guy. He said, like, how could you even do this? How could you make the people to sell the asset, or not even assets, where the car is not asset, but how can you kind of, push people to sell, something like the cars or some valuable stuff so they can reinvest in the Skyway? Why don't you show them the business model where they could have make the money as they go and they could have reinvest? And that's what Andrew said, like wherever the money I generate and reinvest. So you not necessarily need to sell your cars and sell, other stuff and, I don't know, your wife gold or your husband gold. You can always, generate money here. And this is the beauty of this business. So we are investment. We talk a lot about investment like as instrument, but we also provide you with a platform how you can earn money. So then you creating your assets with Skyway. So you create the assets and you can either withdraw them to pay your basic needs or to go on holidays, whatever you prefer, or you can reinvest them back. And in this case, you don't need to sell nothing which you might have, you can stick to them to the business side, and the more money you generate, the more money, the more bonuses you have, the more you can invest into it. And that's how it should be from the investor point of view. Not I will sell this and then I'll invest in this and then I'll wait for next 5 years, and what if nothing happens? So you need to understand and never advise people to to sell something for them to invest in something. This is the people need to have the mindset, I need to create assets which can provide me with income, and this income I can reinvest. And this is the right logic, because remember in the second session we talk a lot about Robert Kiyosaki, different cash flows. So investor cash flow will never would be, this is my income stream, I will sell it and I will invest it. The investor mindset will be, I generate the income stream for whatever expenses I need to match. And that is how successful people think. And that's what we want you, as you as a leaders, that's what should be your teaching to other people as well. And that's the message we want to come across for everyone who would want it to be involved in any investment, include the Skyway. Okay, so any questions? Give me a bit of feedback as well. That's one of a mistake. You've been awesome. Thank you, Andrew. Do your homework. So just sit, go back to the previous homework, complete it. And for this one, what do you understand? Maybe it was something you learned for the first time. Maybe there are some instruments which you were not aware about, but now you do, and you understand it's, better. So just give me a bit of feedback, and it will be good to know your opinion, also how useful this was for you. Yeah, sure. Please contact Annette if you have any help with the homework. I wish I knew this 5 years ago. You see, exactly. And you know, it's never late. It's just some people, they will never learn it. So it's good that at least we know this now, so we can take this knowledge and apply, and we all, you know, shall be successful once we know the basics, how to start into the investment world. And also, as I mentioned previously to you, in Skyway Invest Group, so we're looking for different investment instruments within the company as well. So once we finish with Ecotechno Park, once we finish with 15 stages, Andre already in the process of creating different portfolios. So then people would look at what percentage they want to have and what risks they want to take, and they would be able to add a few other instruments to their portfolio, including the local project development. So I think it's, you know, it's good time that you pass it this Profi now, because from next year onwards, it could be slightly different teaching, and we will rely a lot on you guys, because these are the very important basics to know. And once we have our portfolios in the back office, then it's will be much more detail into the investment rather than just about, you know, the Skyway technology. So our focus will be slightly shift, but at the same time, we still wanted to provide value to people, so you can use this with us. And even if you look at the broader picture at your personal investment portfolio, this knowledge is what you learned today would be enough for you to make the, at least, you know, right decisions which can make you to be, you know, more successful investor. Open up the mics. Good stuff. Awesome. Okay, if you don't have any other questions, then we're done for today. Thank you so much. Thank you for all who contributed, for all your feedback. It was really a pleasure to have you here. So we have a bit of interaction as well. Awesome, guys. Okay, have a good day. Have a good night for some of you, and I will keep you posted when the next meeting will be, and recording will be available shortly. Just give me like an hour to convert it. So thank you so much. Yeah, Sharon, talk to you on Skype. Thank you. Bye-bye, guys. Awesome.